Cash balance plans are one of the most powerful retirement tools for high earners and business owners, yet most people don't understand how they work. In this video, we'll break it down into plain English, what it is, who it's for, and how it can supercharge your retirement savings.
Katherine, what is a cash balance plan?
It's a type of defined benefit plan, but it feels like a money purchase plan on steroids.
Right. Now, this is different from your, you watch a cop show, or maybe you got a parent who was a teacher or something like that, and that kind of plan has different rules to get a bigger benefit, and those plans are usually paid out monthly, starting at retirement. Cash balance plans have a lot of the same rules, but they operate a little differently.
So each participant has a hypothetical account that grows every year. Now, we're saying we're going to say this plain, but what this really means is all the money is in one bucket, and it's assigned how much you have.
Right, it's on
They know how much you have.
Thank you for saying it like that. A hypothetical account is really, we're just keeping track of it on paper. Okay. Whereas like with the 401k plan that you probably still have, everybody's got their own account. We're going to talk about that a little bit more in a second here. But when we say hypothetical account, think of it means it's actually really just on paper and we're keeping track of it.
Pay credits, as Christopher explains, are
accrued benefits made by the employer. Okay. Because you accrue a benefit regardless of what the employer puts in. Okay,
it's like a promise. It's a hard promise.
Right. It depends on what your W-2 is, what the benefit formula is. So it's a benefit accrual. Now, what's next, Katherine?
Interest credits,
right.
A guaranteed rate of growth set by the plan.
Right. It's unrelated to what the assets are actually earning. This is a guaranteed rate that the employer has to cover.
So think of it as a pension with a modern twist. Predictable growth,
yep.
Flexible structure.
Absolutely. You can, with a lot of our cash balance plans, if you're 24 years old and you're going to assume the same salary, we can give you to the penny what your benefit is at age 65. Yep.
Who is this best suited for?
This is best suited for business owners or self-employed professionals, your doctors, your attorneys, your consultants, your architects, etc. Okay, especially those who have already maxed out their 401k plan and still want to save more for retirement. Katherine, does a cash balance plan work great with a 401k plan?
Beautifully.
All right. This is a cash balance plan coordinates best with a 401k plan. A traditional DB plan doesn't. This sets you up for much higher tax deferred savings because you're accruing a larger benefit, and the employer who has reasonably predictable income streams is also going to be best suited for this type of plan.
So, why do business owners love it?
Very large tax deductions. We were working on a plan design this week where the accrued benefits and the deductible contributions were 4 times their current salary. It was you cannot do that in a SEP, okay? These contributions are made by the business and fully deductible for the year for which they apply.
And it is accelerated savings, so you can put away hundreds of thousands of dollars per year, depending on age and income.
Right. Obviously, a 22-year-old making $300,000 can't put away, surprisingly, as much as a 60-year-old making $200,000. Okay, because time is important.
It's about math.
It's about math. All right.
That's all it is math.
But this leads us to the next one. This is a great retirement catch-up tool, okay? As a business owner, I'm very happy that a lot of my boomer brethren have only just started to save for retirement, okay? This is a great way to get 30 years of savings done in 6 or 7 years. If you're behind on savings, but you're earning a lot of money in later life, this is a great way to get caught up.
And it is predictable growth. It's not tied directly to markets' ups and downs, though it is the employer setting the rate in the document, and they have to keep track of that.
Exactly. So the participants in the plan know what their benefit is going to grow by. Now then, this works great alongside a 401k plan. We typically pair it with, I think we have one cash balance plan that is not paired with an employee deferral plan because it's typically paired with the 401k and the profit sharing plan. This gives the owner the maximum amount of flexibility.
So, for example, employee defers to the 401k and employer contributes to both plans.
Right, okay. Now then, together, these can create a significant pre-tax savings and reduce, obviously, your current taxable income. Now then, what you have to remember is that you're talking about the pool of money, all right? How investments are treated inside a 401k plan and how they're treated inside a cash balance plan are very different. Most 401k plans, the employees can direct their investments in the 401k plan, but in a cash balance plan, they are not allowed to. It is one pool of money.
So, things to consider before starting. So, you must commit to annual contributions. It's not as flexible as a 401k plan.
It's not a lifetime commitment, but you have to think of this for a good number of years, all right?
And it requires actuarial calculations and annual filings.
Right. There is an annual filing for this, and we do have to pay our actuaries.
So there are regular expenses.
Absolutely. This is ideal for stable businesses with consistent cash flow. There is the possible additional PBGC premium, okay? Yes, this is an additional premium. It's an additional expense, but plans that are subject to the PBGC premium can contribute 19% more of payroll to the 401k plan than a cash balance 401k combo that is not subject to the PBGC.
So you will need help from a TPA or actuary to design and maintain it. This isn't DIY.
This is not DIY, correct? Okay. Neither with them. All right. If you would like us to review your cash balance or 401k plan for potential errors and/or opportunities, sign up with the link below.
We have the red pens.
Also, there is another link where you can find out about our other video channels. And of course, if you have specific questions about your plan, just email us at sales@honorbenefits.com. And please don't ever forget to keep those cards and letters coming.
Toodaloo.